What's good, y'all? Big Fish Capital, Big Fish FX, Big Fish Technicals, Technical Analysis. Right now we're gonna dive into candlestick anatomy. Basically dissecting the candlesticks. See, a lot of these traders out here, they don't even really know what these candlesticks represent. You know what I'm saying? Like, you'll see a lot of traders, they just name the candlestick. Oh, that's a morning star. Oh, that's a shooting star. Oh, that's a hammer. It means reversal. But they don't even know why it means reversal. You know what I'm saying? They don't even know what a candlestick represent. You know what I'm saying? And another thing is, instead of like really trading candlesticks and price action of the candlesticks, they're out here that they're trading indicators. So like, I'm really against that. I feel like everyone should be skilled and should know price action, candlestick trading, price action. Not, the basic just indicator driven charts and stuff like that. Price action, candlestick trading. So this is what I'm gonna get into. I'm gonna make you guys pros. And keep in mind, when I keep telling you guys, learning this is more than Forex. You feel me? With this skill set that I have, I can trade Forex, cryptocurrency. I could trade stocks. I could trade binary futures. I can trade, you name it, anything with a chart. I can trade it. Options. I can trade all of it. Contracts. I can trade all of it. You feel what I'm saying? Because I understand how the charts move and what they represent. So let's get down to it. Candlestick anatomy, right? So first and foremost, we have to understand what a candlestick represents. Like I said in the market structure video, the market structure module, the market is nothing more than bulls versus bears. Bulls fighting bears. Sellers or buyers fighting sellers. Red fighting green. That's all it is. And they're just trying to gain control. Never ending cycle of good and evil. So it represents life as a whole. And you can see it as it moves. When I say it represents life as a whole, you know what I'm saying? When all of the movements up and down get painted on the canvas, you'll see it represents the ebb and flow of life. You know what I'm saying? So it represents the ebb and flow. You have a down point in your life, depression, you're sad, something happened to cause you to be depressed. Then you have an up point. You feel me? You're up, then it gets kind of mellow, you're bored. Then you have another up point. And then you have a down point, probably a pandemic happened, and then you have an up point. So it represents life. You feel what I'm saying? So if you look at it in a spiritual sense, that's how I look at the chart, is in the spiritual sense. Ups and downs, nothing is greater than the other one. When there's a down, you have to basically prepare for the up. When there's an up, you have to prepare for the down. So when things are going bad, you have to prepare, you have to, anticipate good things. You have to bring that about. But when things are going real good, you have to prepare for the bad, for the rainy days. And that's how I look at the market. So back to the candlestick anatomy, right? So basically, let me see if I can draw one. Don't judge me. So this right here is a red candle. Now, when you see this, how do you feel? What does it represent? If this candle did something like this, right? It represents a sell. So price move down, move down. So all of this filled in candlestick, all it represents is the battle between the bears and the bulls. It being filled red only means that within this time frame, let's say if it was in a 30-minute time frame, within this time frame, the bears won. within that time frame. And because it fully engulfed, this is a strong pattern or a strong candlestick. I'm gonna get into that later. So that's what that means, right? So however it fills up is basically what it means or what it represents. So this represents a major sell. If we see something like this, right? Remember in our analysis, and when we're looking at these, we're gonna think of red as being sells and green being buy. So when you see something like this, all it means is that price was pushed up and it continued being pushed up. And that's all that means. All that represent. On a live chart, you can see it here. Price is pushed up, a little sell right here, but the sellers didn't have full control. They didn't have enough momentum, and it pushed up again. All this mean is within the 4-hour time frame that buyers won that time frame, that time period. And it being a long candlestick mean it was a powerful push up by buyers. They put in more orders, and more orders went through for that position, right? So going back to this right here is a complete full candle. When you don't see a wick, a candle wick, it's a complete full candle. This represents a strong trend. The reason being is the wick only stands for a shadow of the candle. And let me break it down for you, right? Let's say if the candle, this is the length of the candle, right? Let's say if these candlesticks are the same length. But let's say this is like this. It's not going to go straight. This is like this, but this is like this. What does this represent? All this represents is this. I'm going to break this down for you. Let me bring up the chart. This, right? So the candlestick represents the opening of the actual price for that time period, the low of the price, the high of the price, or the low of the the lowest price within that time period, the highest price within that time period, and when it opened and when it closed. So this candlestick, let me show you. It opened here, and this became its high, right? So it opened here, it went up, this became a high, and it became its shadow. Because once it went up, it shot back down. It shooting back down creates a wick. Nothing is filling here anymore, but the high is up here. This is the highest point that it reached. It creates a wick. So it opened up, shot up, but then it was forced down. So from here, it was forced all the way down, so it was painted red. Because all of this is sellers. They basically took over the market, or that particular period. And it pushed it down, all the way down to the lowest point. This was considered the low, went up a little bit, and it closed. So let's say if this was 30 minutes, at 0.01 seconds, it opened here. Within the 30-minute time frame, it made movements. It went up, came all the way down. By the time it hit 30 minutes, it closed here. So within that 30 minutes, it closed here, and then another candlestick was formed, right? Same goes for here. It opened here at the bottom. It came down, but then it shot up. When it shot up, it created a high. And it came back down and it closed here. And it painted green because remember, when it initially opened, it opened here. Sellers was all here. So let's say all this was painted red because it was all sellers. It was painted red. But then as it shot back up, back to the open position, all this means as more buyers took control. So the buyers, so it basically painted it green, representing that buyers took control of that candlestick. You know what I'm saying? Just keep on with me. Keep on studying this stuff and you'll get it soon. You'll get it in the future. Upon first looking at it, you won't get it, but you're gonna keep on. If you keep on looking at it, you'll get it. And if you get it, it'll settle in, right? If you keep on studying it. So that's just the basics of candlesticks. So this is considered a wick, which means the candle, at some point, the candle came down, but then it was pushed up and it created a wick. And for something like this, because this is a seller's, let's say if this was a seller's trend or whatever, it would have opened here, went up, or opened here, went down, came back up, and made the wick right here. So wicks are important. The shadows of the candlesticks are important because it shows you where it was pushed. So we use wicks to determine the direction of the market, or to determine the momentum, the push of the market. So like for instance, if this wick is here, all that means is before the candle closed, it faced some buying pressure. So it was pushed up by buyers, but it wasn't pushed up all the way. So it's basically letting me know that there's a struggle and there's a chance that the trend might reverse because buyers are starting to gain momentum. So if you see something like this, right? Let's say if we see something like this. I'm gonna get y'all, you guys gonna understand this. People don't teach this because they don't understand this. And that's just stupid. Because this type of stuff, if you know it, you can understand what's going on. I mean, do that. If you see something like this, right? All it's telling you, let's say if it opened up here, shot down, it was pushed up. Let's say if it was open, so when it pushed up, see, it really depends on where it's at, where it opened. But if it shows that you see a wick, so it push up, push up, push up, that means that somewhere along the line, the seller's market, the seller's trend is dying down. It's being pushed up. Like this, push up, push up. You see the wicks, and then you start seeing green candlesticks, and it start going. These should be green because this is a up push. If it was the opposite direction, it would be a down push. So it's being pushed up, pushed up, pushed up, wick, 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 right? So now, if it goes like this, what we're seeing here is, let's say it being pushed up, and then the body grows shorter. As the body grows shorter, all this basically letting you know is that the trend is dying for that particular for the bull or the bears. The shorter the body, it means that momentum is dying. Now, if there's a long wick and a short body, it means that there's closely there's gonna be a reversal occurring shortly, right? So now let's go back to the chart to explain some things. All right. When you look at this, what do you see? You see wick on top, wick on bottom, and a small body, right? So now when you see something like this usually means confusion. When you see wick on top, wick on bottom, and a small body, that means there's a stalemate between the bulls and the bears. There's confusion. So, for instance, everything is basically relative to the other candlestick. So everything is relative to the candlestick next to it. So let's say, for instance, right, this is going up. So the wick it was going down, but it was pushed up, going down, pushed up, going down, pushed up. You see how it looks like a rocket going up, pushed up. You know what I'm saying? So it was going down, pushed up. And what happened here is, as it was going up, it was pushed down. This right here, now you see a down rocket. It shot down. As it shot down, it created a red candlestick, because all this means is seller's momentum pushed it down. The next candlestick that opened became a seller's candlestick. But because the trend is too strong, the buy trend is too strong, the next candle that opened, it became a buyer's candle. So the buyers took control, and it closed this entire, it covered this entire candle right here, and it went back up. Our whole goal is to understand the market by looking at the candles. You can look at the wicks, and the wicks will tell you stories. When you see push-ups and push-ups, push down, those are major rejection symbols. As you can see, let's look at this, right? Let's start from up here. Let's start from up here. Okay, it's a downtrend. Oh, a little confusion here. Shot up. But as long as it doesn't continue with green candles, we're fine. Then some more downtrend. Oh, a little confusion. Shot up. Came back down. Downtrend. See how this downtrend, it got pushed up. And it shot all the way up, but came back down. This downtrend is strong. It's very strong. So there's not really too much to go into when speaking about the candlestick itself, because the most important thing to understand about candlesticks is the patterns of the candlestick and what they represent. So we're gonna get into that like right now. What each candlestick basically represent. So one of the most important candlesticks that you will see is what's called the doji. It'll look something like this. That's a doji, right? And usually it has a body in the inside to look something like this. That's an ugly doji. All this means is the candlestick opened, the candle opened, it went all the way up. It closed, no, it opened and went all the way up to create a high, came back down. So let's say if it opened here, all the way up to make the high, came all the way back down to make the low, came all the way back and closed right here. That's considered confusion because it didn't really close high. So dojis usually mean there's confusion in the market based on whatever trend it is. So let's say, for instance, there's a trend like this, right? And it's going up, but then you see this doji. All that means is there's a possibility that it can reverse. It doesn't mean it's going to reverse, but it means there's a possibility it's going to reverse. And I'm going to get into all of that soon on specific patterns or specific reversal patterns to look for when you're looking at these things. So it means that it got stopped in its track. When you see something like this, think of it as a stop sign. Think of it as a stop sign. It could look like this, or it can look like this. Or it can just not have a body at all. Examples. These are dojis. You see how it was going up, going up, going up, going up, and then bang, stop sign. Then it started going down. It got shot down. Now what we look for is the dojis on highs and the dojis on lows, not dojis within trends. A lot of people confuse that. They don't really too much understand that dojis within trends aren't as powerful as dojis where there are highs and there are lows. As you can see, this is a swing high, impulse. Remember our market structure video? Swing high, and then boom, it got rejected, shot down, and it's finding it to be a hard time to actually cross up here, and it creates a doji right here, right? It creates a doji, and nothing really closed above all of this, and everything just keeps closing below, and it kept leveled, and then until it shot down like this, and it covered this entire doji, which I'm gonna get into in another video, and then it started going down. You can see down here, same thing. This is considered a powerful doji right here. See? Swing. What do you see there? A doji right here. And then it started going back up. Same thing here. Dojis usually mean stop sign, confusion in the market. And it started going up. A nice little doji, nice little doji. Look, nice little doji. That's all it means, is confusion in the market. That's the first candlestick that you need to know, because that's the most important one. because we trade a lot of reversals. So we kind of hawk down reversals. Let me see if I can find more examples. Let's go to the daily. Look, it shot up. Look at this doji. This is perfect. Doji. So now remember, what represents a trend is pushes to a specific direction. So this kept being pushed up. It kept being pushed up. Then the bodies, remember I told you, the bodies started getting smaller until it became non-existent. Right? So it kept shooting up, kept shooting up, kept shooting up until it got stopped. So now when you see something like this, you kind of have to step back and ask yourself, okay, what's going on? Is it going to continue or is it going to reverse? I'm going to show you in the next video what patterns to look for as reversals. But for right now, we're just going to focus on the dojis. Got stopped in its track, get it shot down. Look, all of this. All of this. That's basically it with candlesticks. Now with candlesticks, like I was saying, study them. This is all candlesticks are. It represents the open of the price, the high, the highest point that it got to within that time frame, then the lowest time it got to within that time frame, and the close when price closed within that time frame. That's all it represents, right? But I'm gonna get deeper into specific things you need to look for, and these things, once you're skilled at finding them, you'll start understanding the charts better. So next video, this one was just a brief introduction to candlestick anatomy, so you can actually understand what candlesticks are. They're not just like, chalk on the chart. They actually represent something, right? So that's that for right now. See you in the next video.